Ladies and gentlemen, if you own physical silver or you're thinking about buying it, you need to pay close attention to what could happen when markets open on Monday, because behind the scenes, something unusual is unfolding. Institutional investors are watching the silver market more closely than they have in years. Physical demand remains strong, industrial consumption continues to grow, and traders are asking one critical question: is silver on the verge of its next major breakout? And here's what makes this even more interesting. Former Federal Reserve Governor Kevin Warsh has repeatedly emphasized the importance of restoring confidence in financial markets and maintaining monetary discipline. While he has not predicted a silver price breakout, many investors are now debating whether a changing policy environment could create conditions that favor precious metals. So today, we're going to separate facts from speculation. We'll examine what's happening in the physical silver market, why institutional money is paying attention, what recent market developments could mean, and whether Monday could become a key moment for silver investors. Let's get started. For years, silver has lived in gold's shadow. Whenever investors talked about safe haven assets, gold dominated the headlines while silver quietly moved in the background. But today, the story is changing. Silver is no longer viewed only as a precious metal. It's also one of the world's most important industrial commodities. From solar panels and electric vehicles to advanced electronics and artificial intelligence infrastructure, global demand for silver continues to expand. At the same time, supply has struggled to keep pace. That's exactly why more analysts are beginning to ask whether the silver market is entering a completely different phase than what we've seen over the last decade. And if they're right, the coming weeks, not just Monday, could become extremely important. Let's begin with the physical market. One of the biggest differences between silver and many other financial assets is that there's a significant distinction between paper trading and physical ownership. Every day, enormous amounts of silver are traded through futures contracts and financial instruments. But owning physical silver is something entirely different. When investors choose to hold real bars and coins instead of simply trading contracts, available supply can tighten much faster than many people expect. That's one reason experienced market participants monitor inventory levels, industrial demand, and physical premiums so closely. Now consider the demand side. The global push toward renewable energy continues to increase silver consumption. Solar panels require silver because of its unmatched electrical conductivity. Electric vehicles contain more silver than traditional gasoline-powered cars. Modern electronics, medical devices, and advanced communication systems all depend on this metal. Unlike gold, much of the silver used in industry isn't economically recovered after use. That means a significant portion of annual production is effectively removed from circulation. Over time, this creates an important question. Can mining production continue keeping up with growing industrial demand? That's exactly what investors are trying to answer today. Now let's talk about investor psychology. Markets don't move only because of supply and demand. They also move because expectations change. When large institutions begin reassessing the long-term outlook for inflation, interest rates, or economic growth, portfolio allocations often shift. During periods of uncertainty, investors frequently increase exposure to hard assets like gold and silver. Kevin Warsh has consistently argued that credibility in monetary policy is essential for long-term economic stability. Whenever markets begin pricing in changes to central bank policy, precious metals naturally receive more attention from investors looking to diversify risk. That doesn't guarantee higher prices, but it does explain why silver is once again becoming part of serious institutional conversations.